All right, good morning, everyone. This is Rose. All right, today is July 1st, first day of the month. Today, we don't have, obviously, open house due to everyone um, traveling. At the moment, it's just myself and Brad. Brad is not going to be present today, but tomorrow in the afternoon, Brad will take over and I'll do the morning again. So today's half day, and I will be done with the live streaming midday today. I might extend it just a little bit. Um, I apologize for yesterday's end of day review. The phone call ended up being longer, and I needed the computer to fix things. So as I was on the phone with the support team, so it just couldn't. I had to end up closing out the live stream. But let's do end of day review now. Quickly, some of the bars here. So the day before ended up closing in a trading range, but it's a very tight trading range. And you're going to have most likely bulls coming in due to prior bullish move into the close. And then we opened up with a bull doji. Some bears try to sell from above bar one yesterday due to being a doji. So it's a trading range bar. There's sellers above, buyers below. But it is a bullish doji, so I'd rather not to sell from above. Instead, I like to put buy orders starting from the midpoint to the lower third and underneath bar one and wait for price to come down and get me into the trade. So I don't get disappointed there with bar two. Buyers are entering into the market, but yet another doji. However, we're getting a breakout. Okay, think of this as a tight trading range. Okay, and bulls already started to close bull bar. So this is a buy to close bar one, and close bar two is buy to close bar one, and bar two they close the body a little bit better than the bar one doji body, candle body, but it's nonetheless still another trading range confusion. But I could see a little bit of decision making there by bulls. I want to see a much better bar and a bullish momentum to start. And bullish momentum started with bar three. That's another buy to close of bar two bar, and yet it now overlapping with the upper wick of bar two that constitutes a healthy bullish trend starting with good momentum possibly. But the bar three has upper wick, so it is kind of a glorified trading range bar doji. But because bar opened nicely and closed above its midpoint, so therefore it is more of a trend bar regardless of its upper wick and lower wick. So bulls might actually buy it. It's more of a follow through. It's more of a momentum bar, so bulls will buy the close. So I would definitely buy the close of that bar or put a buy order one tick above bar three, and that's what I would do. But give me a second. Back in here. Okay, so what is okay? I'm having a hard time here. Oh yeah, okay. Sorry. Someone is messaging me. I'm trying to hide that so you won't get distracted. Okay, so is you got bar one, bar two, bar three, or buy to close, and then bar four. Some kind of momentum here, but you should be buying, and then if you put a buy order above bar three, that is a bull flag anyway. So bar five comes in. It's also inside bar. Bar five is closing above the inside bar. You can buy one tick above bar five if you haven't entered already. Stop below inside bar four, you are now long. Okay. And if I put my stop underneath bar uh, bar bar four and I enter one tick above bar five, approximately that is my measured move right there, and that's my 2R right there. Okay. I will take that because move already started here, so you get a leg one, pull back, leg two. I'm looking for a leg three to go higher to my 2R, so I will mark that 2R right there, and I will buy bull bars towards the moving average there. Okay. I want to get in with good looking bull bars, even though we're coming down with possibly 2-3 legs to the moving average, and my 2R is sitting right up there. Yeah, so you have a 1, 2, 3 pullback, bulls will buy. You have a demand here that requires 1 or 2 more legs up. So this would be pullback failed, bear flag failed, turns into, if a bear flag fails, that means it's a high 2 bull flag. But to me, this is high 1 bull flag, and so we're going to get a high 2 probably. So we pull back to where the bears failed, right around here, right? And then I'm looking for bulls. So I'm looking for bull bars closing above bear bars. Okay, there it is. So I can start buying. That's my high 2. And nonetheless, so I want to keep buying, especially if I get another bull bar. I'm targeting bar 15 high and bar 14 high. And there we have it. Market is trying to reach my 2R target most likely. So you should be long into that. And there you go. So we got the 2R target right there. Okay. And that turned into a brief, always in short, but let me put it this way. If you don't have 3 consecutive bear bars, this is not always in short. Now, you have a gap bar. You do have 3 consecutive bear bars, but the problem here, if you put a sell order 1 tick underneath bar 18, once you see bar 19 and bar 20, you need to cancel that and you need to buy. Okay, that's what you need to do. So basically, bulls invalidate the bears, and now you are long. All right. So therefore, you should be going for a 2R target, and you could buy. You can even add with strong bull bars close as possible to the moving average. You are now in a spike pullback and channel. Channel should give you 3 pushes up. You got actually nested wedges, 1, 2, and 3. 1, 2, and 3. So we're going to get a pullback, and it's going to be a decent pullback, most likely to moving average. If and only we start to close consecutive bear bars below the moving average, then you can look to sell. But otherwise, you should not be selling this this trend. And if you guys remember, I actually drew this trend line. I said even if you break this trend, even if price breaks the trend line and you sell, bulls are going to come in and we're probably going to test the high because they're kind of like a tight bull channel. First break should be invalidated and should be bought. Okay, so if this is your spike pullback channel starting point is with bar 18 low. So we have tested it. We came down, but again, this is not always in short, right? Because we're getting only 2 bars, not 3 strong bars with a gap bear bar. We're getting 2 bars and bull bars and then alternating bars. So you can see right here, bulls are looking to come back in again, and there's a gap open here, and then you get bar 51. It's pretty much a leg 1, leg 2, leg 3, and now you have a bull flag forming. So if you don't want to buy 1 tick above 51 because the tight trading range, probably sellers there, and they want to sell, and now you see no follow through for bears. Now you start to buy. So that would be your high 1. Actually, this would be high 1. That would be high 2, but then high 3. So you're making money right there. You should be targeting bar 43 high and then counting 2, 3 legs up. Here's a leg 1, 59 first high. Leg 2, 66 second high and pullback. And then the third leg. Now you're getting a really good sell signal bar. Now is the time. And we're getting closer to the end of day. That is a really good sell signal bar. If you guys remember, I finally exited and started to sell. Here, I had to go for a phone call. Remember what happened there? I was still selling. I exited. And then I said, I'm going to buy with 1 contract because I thought we might be able to get to 75.70. But then bear sold, needed a second leg down. Came down. So I had a stop right here. This is the bar that I bought and stopped right there. It actually came down pretty fast and hit my stop as I was on the phone, but that's okay. At that point you just have to walk away, and because that's a second leg, and that bar will need leg 1 and leg 2 down. So if you take a look at yesterday's price action, right, that's 15 minutes. So let's go to 5 minutes just to see if they gotten that leg 1 and 2. So that was that bar right here, bar 78. And that's a leg 1 maybe, pull back leg 2, or leg 1, pull back leg 2, or the whole thing is leg 1, pull back for bulls, and leg 2. So it turned into a double top bear flag. But what this is, everybody, is actually, it's a spike, pullback, and coming down, failing, going back up, making a double top, and that's a swing. Okay, I love this pattern. It takes a while to form on a larger scale, but in a smaller scale, it's right there. This is the opposite, like failed pattern. Spike, pull back, 2 legs, goes up, fails. And now it's making cup 1 and cup 2. Now you can buy and look for 2 legs up. Okay, but this one didn't, made a nice double top. You see this gap? If the bears actually close that gap, now you can take that projected 1R and maybe even 2R. You can get that. That's your swing, and you got it. Look, see, this is the pattern I love. Again, I'm gonna draw that. It needs to jump at you with a spike and a pullback and a couple of legs down, 2 legs maybe, or you can find 1, 2, 3 push. Then mark that and then look for a pullback, another pullback. If they cannot take out this high, now you see this gap here, bull gap. If the bear is closing that gap, now sell with a couple of legs down, or take this trading range, project it down 1 and 2. Take this trading range, project it down 1 and 2 until you hit that 2R. Do not look back. Scalp here. Look for bear bars closing below 1R and keep selling, everybody. You're going to get that 2R. This is the trade you want. Okay? Because in a way, this is a tight bull channel. First break of a bull channel, do not sell. Expect the highs to be tested. That's a higher high, lower high, major trend reversal. And you even have, right? So here, I could take that. That would be my 1R. That would be my 2R. You got 2.5R before. I got actually 3R before it actually started to bounce back up. You got 3R from this. That's one way to measure. Or you can measure this entire move down with the gap, right? And then you look for, I don't know, did we get to 2R? We didn't get to 2R. I would take that if I take this lower high, okay? Or another way, just measure this bar, just measure that bar, okay? I would take that 1R and look how close it got into the 2R. Actually, I measured it wrong. You need to take that. I exclude that wick, and then look now. I mean, this is good enough for me. This is good enough to kind of like 2R. It's still missing a lot here, but to me, this is good enough because you're kind of trading the London session, and London 330 will trap you. You see this bull bar and then another bull bar. This is where I would exit. So if you actually sold and held, maybe you sold this bar, say you sold that bar with confirmation, and then you exited with that bar right there. That's a 20 point and 3/4. Even if you enter late, you're going to make money. Okay. But if you entered double top again here, that's the right way to enter. I would make money. But the way that I measure, I take that high, put my stop there. If I take this, that's really my 2R. And if I see bears closing, I would have probably exited with these bull bars. So I would not assume we would get the 3R. But then you have a similar thing happening here. This is now a bear flag. And if you're really holding overnight, you see a bear flag here and market sells, gets very close to, it gives you the 3R, gets very close to, well, that doesn't matter. That actually is today. Don't pay attention to blue line, has no meaning because that blue line would have been up here by then, right? That's the low of Globex. It's there for now because we have extended down for this. So basically you're not seeing that. And by the time it gets there, basically you're selling again here. But to me, I got my 2R, major trend reversal should give me a 2R, and I see these bars, I would probably exit it. Or if I had a sell or if I'm having my stop trail down, actually my stop would not have gotten hit. It would be above this doji. and I would have just missed, they would have just missed me, and it would keep coming down probably. But if I'm sitting in front of the computer, and that's the caveat, because you see this and emotionally you're reacting to these bull bars, and I probably would have exited. But since if you're sleeping and your stop is trailing somehow above these lower highs, I don't know how you can program that. I probably wouldn't. So your stop either would be sitting up here or here, and you'd be out. Okay. And if your stop is way up there, basically you're still in this short into the US session, and it's now coming down. So let's go back to the 15-minute market is open now. They might be coming down to the 4-hour. 1, 2, 3. So they might be coming down to the low of this trading range. It could actually vacuum all the way to here. So let's put that 4-hour here. And then I've got a 5-hour for this major trend reversal. 1, 2, 3, 4, 5. Okay, and that is 3R. Let's see if we can actually close below that. So basically, bears are still selling since yesterday. So you want to swing, you want to learn how to swing, major trend reversals is what you need to study, okay? And Al will break it down for you, where to put the stop. Look, without taking out these lows on the 15-minute chart, you cannot put your stop here. Do not do that. Even though yes, bears took out that low, but it didn't continue. So your stop should be sitting up here at the very least. You put your stop here, it could turn around and exit you and then continue down. But once the bears with multiple bear bars move underneath this bull doji, then you can utilize this lower high as your stop. And then you look for 4R, I'm sorry, that's 3R, 4R and 5R targets down here. Okay. All right, so we are on. So let me put my open node today. Okay, low of yesterday is down here. We're in the buy zone. There might be some buyers here, but you get a magnet. We're probably going to reach that magnet. I don't know how strong this buy zone is. Even no, well, we might still bounce. I mean, you see this bear bar right now. It could end up closing back inside with only a lower wick down. So it is right now selling. ATR is large. It's the beginning of the month. Residue volatility from the end of the month. So it's 14 points. That's still pretty strong. It's trying to get to the magnet, but don't be surprised if this just jumps right up and closes back inside. It was supposed to bounce from here, at least a little bit. So what it could do, it could just bounce and then sell, bounce and then sell. This is where I want to double top and reverse back into this green zone. But right now it's coming down with volatility, but it could also bounce right here. By the time it closes, it could close with a huge lower wick and still close inside the green zone. So I'm going to stay out of this for now. Huge bar. What is causing this bar? Well, there were some Trump news coming up earlier. But let's take a look at the news. Yeah, so we had an ADP employment report came out 8:15 a.m. Kevin Walsh started talking about jobless claims came out 8:30. PMI manufacturing. Today's Wednesday, right? Yeah. So PMI manufacturing is at 9:45. We have about 10 minutes to that news, and then ISM manufacturing 10 a.m. Whew. And then we have, if you're trading oil, status report inventories come out around 10:30 a.m. Yeah, jump packed today, so you guys better be careful. ATR is not helping either. All right, so we did not close back inside, but we're going to pull back into this area, and we're going to use this as resistance. This buy zone is now resistance, okay? When we get there, sellers will be waiting there. It's trying to come into the area of interest now. I'm going to be looking for buyers here. I might be a little off, but Yeah, I'll just leave it like that. Come down here. Come down here. Fed member is talking right now. Big bar probably wants to follow through. But remember where you're selling. You're selling at the lower third of the trading range now. Okay. And there will be buyers here. Even if it continues, which it probably will, because the bar one is so large, it will get probably small. This is a spike pullback, probably get a couple of legs down. And this is where you want. Remember that pattern I talked about. Spike pullback comes down maybe and then starts to bounce. It's going to go right back to that pullback bar. You're going to look for a double top there, okay? And then reversal back down. But if that gap is not closed, then you make a higher low, and then you get a first cup, second cup, and bam, 2 legs up back to the open of the day and this gap area and close of yesterday. We can end up going right back there, okay? So bulls supposed to buy in this area. They already bought with limit orders stuck. They're buying at the natural support and resistance. In this case, it's support, right at the moving average 200 EMA to get back to where they bought so they could have a break even. Therefore, when we get into this resistance area, it was a support turn resistance. Sellers will be waiting there. We could test the lower third of this huge bar one, bear bar, or go and test the midpoint, which is right inside where the bulls bought, okay, and then sell. So this is where I wait a little bit. If you're selling already underneath bar one or the pullback, you're going to have to sell the pullback now as well. There was a 6-point, I'm not sure, more than 6-point magnitude of earthquake just happened in Japan, like 10 minutes ago or something. There you go. It's trying to get to that resistance now, support turn resistance. And bulls bought with limit orders will try to exit, and bears will try to come. But we might need to go well inside and test well inside that area. So we want to actually test the midpoint of bar one. One midpoint is 75.20, 75. Could go up to upper third, which is a little bit higher. So that's where the sellers are waiting now. What is the black lines? Black line, you mean this? This is 200 EMA, which is 1 hour EMA. It's this blue line coming from the 1 hour EMA, 1 hour chart. The black line on any chart is 200 EMA. Okay, if it's a daily, weekly, and monthly, that's 200 SMA. It's L setup. There you go. It's about to test the 50% of bar one. Sellers should be as early as there. They were actually at the lower third, so they started to sell lower third. I didn't mark it, but see, lower third was right here. So they did sell. Look, right there, 33%. That bar actually went up, came down, but weak sell orders. So now it's trying to get to the midpoint to the upper third, which is 66%. Okay, when does it reject? And say you want to sell this, but suddenly you see bulls actually closing above 79%. Ooh, I wouldn't sell, because that could actually, if we start to close a bull bar above the 79%, so that means, look, bulls already closed above 21%, so they definitely want to test the 50 and all the way up to 79. We start to close multiple bars, bull bars above 79%. Market can reach up to 133, 166, even 200% up. That will be a full rejection. Right now, what's happening here is that the bulls bought with limit order in a buy zone, valid buy zone, dumbfounded with bar one closing like that. They're going to a break-even mode. So they're trying to reach that midpoint and it would give them a break even. What about the bears? Then the bears would start to sell there and higher because they sold underneath bar 1 and got trapped. So they are going to sell around 75.25 to 75.20, 75 to break even. You are a bear, sold one tick underneath that bar. You put a sell order as early as the 50% of bar 1, your break even will be right here, and you're going to hope that the market would get there. So you would see this kind of price action go up maybe and then come down. Since ATR is large, we could also reach the 75.25. Then I would measure my break even not from the 50% of bar 1, but the 66% of bar 1, which is 75.25 area. And that if I'm stuck here, sell there as well. So then my exit would be break even with no loss would be 75.16 1/4. I was muted earlier. I just didn't have anything to say until 9:15. I was charting, so I didn't really speak at all. All right. Well, okay. We have news coming up right now. Bears sold to 33%. Still trying to make money, but two bull bar it really needs to reach the 50% at this time. At this point, could go even higher. So watch this bar. Could go higher. This is news bar, so be careful. It's trying to reach places, but sellers inside 75.25 to 75.20 3/4. This is my first trading room session. Rose, can you tell me what measured move tools you are using as well as risk reward tool? I'm using Fibonacci retracement. And I have template created, or you can use the risk reward. You can, this one is set up for 1 hour, but you can set it up for, instead of 1 ratio, you can make it 2. That will give you a 2 hour, but it won't give you 1 hour. So it's kind of a it's a poorly designed one. Use the Fibonacci retracement, that will work, or some third-party tools would work too if you have them. NinjaTrader ecosystem has free ones you can adjust to your liking. Would give you multiple risk. I just keep seeing these photos coming from Macau. All this food that I missed. That's the most important thing that I get upset about. Anyway, we're right at the 50%. Okay, now we're testing the 66. What if we start to close above 79%? Things are going to get bad for bears. Okay, bulls are now back to making money. Okay, they might be making a little bit more, but bears need to sell. Okay, so then bears need to sell because they're stuck here. So this is their last chance to sell now. So their break even now moves up here. What if it could go up to the 79%, and then you would measure from there, but see, it's still going up. This is getting dangerous for bears now, but they will sell. So approximately from 16.25 to 18 is now their desperate break even for bears sold underneath bar 1. Bulls bought here. They were supposed to bounce and get a win. Now they're getting, but they know if they cannot close a bull bar above 79%, this can collapse right down to the 75.18. So now bears are like, we got to sell here. We got to prevent a bull bar closing above 79% because the moment it closes, these bears are going to have to wait. They're going to have to wait because it can get a breakout, test the bar one high, and continue going up. And then the bears will be forced to sell at the moving average. So this is why when I look at the full picture, you should always look at the full picture. Someone's asking me, are you still flat? I guess I am not buying this. I am not selling this. Okay. This is where, like, it's almost like walking into a ring of fire. Okay. Or what do they call it? You know, there's that fight the guys do, like everything goes, like you can kick, you can scratch, you can, you know, punch. What is that fight they call it? It's pretty big. I forgot what that. It's really brutal. I can't fight. I cannot watch it. They fly up in the air and turn around and they do weird stuff. It's almost like a martial art, but it's not martial art. Um, this is oh yeah, Rose is definitely a girl moment. Anyway, so it's like that ring. It's like an octagon shape ring. Yeah, you do not want to go into that ring. That's that ring right here. Okay, you will be casualty. So I stay out of this because I know bulls need to make money and the bears are totally stuck. So they can sell any given time within the range of bar one. So you know what? I will stay out of it. Now, you could have bought and say, look, 3 bull bars, just like yesterday, right? Buy the close, even though they're small. And that's kind of what you want for a momentum, but you still have to take profit at the upper third or of this climax bar. Now, why is it going up there? Because it's the climax bar within the trading range, okay? Especially close to the low of the trading range. So the bulls are buying, they're targeting the open and high of that bar. So if I buy here, I have a very limited chance of making money. So it's all right. I mean, you know, I know bears will sell eventually. You're stuck in the range of this bar, and I don't want to buy too up high. So if you were to buy, you would have either bought the close of bar 4 or 1 tick above, but you don't know. What if they sell right in the resistance? Now they're trying to turn resistance into support again. I'm going to get rid of this so you can see it, right? So we're at the open of the day once again, and we haven't reached the area of interest. Eventually we will get to it, by the way. So you have a big down, big up at the open. It's trying to get to bar 1 high, close above it, and get to the moving average. I might actually sell at the moving average. UFC, thank you. Cage fighting. That's what I'm talking about. It's not my forte. I don't really watch those. 2 things I cannot watch. Fighting, despite I'm a Turk. Uh, we don't really like to fight. We're peaceful people, but I like the war games. That's in the blood. I don't like to watch fighting. I don't understand like boxing, fighting, all of that stuff. It's my brain doesn't comprehend like what's the appeal. And I cannot watch people climbing, free climbing or any kind of climbing. I cannot even watch those movies. I get so agitated and stressed. So those 2 things because my brain does not comprehend the need of doing either of those activities, so I don't watch. And then hunting. You're a hunter and you just go out and kill a bunch of deer. Sorry, I probably wouldn't be friends with you either. So 3 things I don't understand. Is I don't understand. I'd be the one jumping in between your gun and the deer probably in the forest. So yeah. Anyway, so this is where bears will now desperate to sell, but bulls done major um, damage here. They closed the bull bar above 79%. They want continuation up now. They want to get to 121% and back up to here, but I am not sure. It could find some sellers at the moving average. Bears are desperate. They need to sell. It could now move down to the 71, 2075. That's going to be the break even or a little bit underneath because it moved so much up. So this is no longer, I think the break even is going to be 50% right here. Bulls want continuation. Up. Oh, I already had it. Okay, I'm gonna get rid of one of those. So bears need to now sell, get down to these levels to break even. They're stuck underneath bar one. So you see, but this is still good for the bulls. They want to close above open of the day and become bullish again. So if I want to really sell, I think I'd rather sell at the moving average. Can I buy here? It's kind of a double top. The gap, bulls trying to get to the 79 low, which happens to be the moving average, and the first breakout target, 39.75. I mean, I could buy maybe here, but small. Okay, I bought it. Just one contract, just to see where it's gonna go. To moving average, 39.75, low of 79. $39.75 is going to be the breakout, first breakout bull target, measuring bar one. But what about the bears? Are they here? They're trying to prevent the close, but we're so close to the moving average, we're probably going to test it. Bar five makes it reasonable for bulls to reach the moving average. Bears want a gap to the moving average, prevent touching and reverse, but I think we're going to have to test it now. Bulls want the low of 79. So I'm now 3 contracts up. I'm gonna scalp a little bit here before. Okay, so I'm gonna leave this runner to go up to 39.75-ish, 39, yeah, or higher, above the moving average. But bears will sell again. When they can sell, because they sold here, I would measure from the high of the SPAR. ATR is 975, so about 21 ticks right there. They could start to sell, or it's gonna go up 10 points and then they're gonna sell. Here we go. Here we go. There it is. 10 o'clock employment came in. You know what? I'm going to take my profit because there could be sellers here, or it's just going to keep going up. So that's the first sellers, 21 ticks above, 5 point above the bear bar, and it could sell. So I took my profit because it's also news. But can it go higher? Yes. ATR is now 10. It could go 10 points. 10 point is right here, and we might need to wait for that. But I always expect sellers here. So that was a very quick trade. I bought it, and I made money. So I'm actually done with the day. Well, not really. This isn't nothing to get excited about. Bears needed to sell, and they're at the 5 point. Okay, and they're selling. They're not disappointing at all. Oops. That's their first sell opportunity. So if you're a bear, again, and you sold one tick underneath bar one or the close of bar one, and you sold at the 21 tick above from the bar one high. Now, what did I do there? Oh, so your break even is going to be early bird special is going to be 33% pullback, but your break even will be here. So they're sold one contract, selling another one. They want pullback to 23.25. First pullback could be around 75.29 for if they're piling their sell orders right here, okay, at the 39.75-ish, meaning like 2 times more than what they sold or 3 times more than what they sold, and they would be eyeing 75.29 to exit. Otherwise, 75.23 and a quarter, 23.50 area is where bears want market to pull back to. Retail traders are looking for a bear bar close to sell, one tick under. They don't have the bar, so they don't want to sell anything. So it's now, I'm flat. I don't have any. Oh, the question is, how many contracts do you usually buy? I start with 1 or 2 contracts, and then I add with good looking bull closes. Or if I'm selling, I add with good looking sell bear closes. Right now, bulls are on the buy from above bar 4 and 5, and bears are selling at the 21 tick from above the bull bar or around the moving bear bar, I mean bar 1, and around the moving average and trying to get a pullback and get a break even. And the first pullback could come down to 29 and a quarter or 75.29, or it could suddenly come down to 75.23 and a quarter. Bulls want continuation up, but we need to pull back first. If we get continuation here with bull bars, we may not be able to see sellers all the way up to 75.48, 49 area. But it needs to pull back a little bit. Could it be the 10 points higher? It could be the 10 points higher. Bears would sell again because ATR is around 10 points. So the next sell, scale in for bears stuck here. So the bulls are making money. You don't want to sell. Retail traders will not enter any short trade. They're either exit out, and that's why you're getting these bars. Strong bears will wait for, they could wait for that bear bar as well. So this is keep going up. Bulls are buying. Could go up to 75.49.50 area. 75.49.50. Next target's 47.50. Okay, we're at the 10 point from above bar 1. ATR is 10 points, so 5 point was too small, but they did try. But you could see how horrible it was. So now bulls trying to keep pushing higher. Keep pushing higher. But there will be some sellers, possibly around 75.49.50. It could surpass the 47.50, but if anyone's selling at 10 point, maybe machine selling and trying to scalp for a couple of points or half the ATR. Can it pull back still all the way down to 23.50 area, 23.50, 23 and a quarter? Again, you need a bear bar for that. Otherwise, bulls are going to keep pushing this higher. So bullish. It became bullish either with bar 4 or 5. But bears still need to sell. Bring it down to the high of bar 1 at least, or the open of the day. But this may not happen. They may not be able to find sellers until we reach 75.50 area, maybe even higher. So see, no one's really selling. It's nice, strong bullish move, but I still expect some sellers here. Because getting desperate and bears need a fix, and bulls know that. So they're buying to reach. I mean, you can also say, hey, there was a measured move target there. They reached their measured move, right? So right there, or you can measure the gap and they got a little bit more to the upside. That's why I said 75.50 area, 49.50 area as we get closer to that target is where bulls take profit and the bears can start to sell. There's more room to upside. Any pullback here towards the high of bar 1, gap may not be closed and the bulls can continue to buy. There's still target above, so you can't really sell blindly if you're stuck down here. You can't. You need to exit. If you haven't exited, then you're being punished. But it will pull back. It will pull back to 75.38, 75.32.50. Could pull back all the way to 23.50. Eventually, it will pull back. It's just that bulls are on a roll right now. So it's pretty good what they're doing. Here we go. We're about to reach the 49.50 area. Okay, so we reached the 75.50. Oh, bulls done a terrific job. Can they keep going to the high of yesterday? Yes, but it needs to pull back a little bit as it's getting gap up from the moving average. It needs to pull back a little bit. But what if it doesn't? It keeps going up and up and up to the bar 75. Good. This is why I see these bull bars. I'm not going to sell. And if I'm selling, I will exit, take the loss, and because you have a way of making money. And you saw me, entered there and made money. So now, can it keep going higher? It wants to get to the high of yesterday, but we are gapping from the moving average. We might need to pull back the moving average. Trying to get a measured move of bar one up because it's denied. Someone's asking me 47.50. Clearly you just came in or looked at the screen because I measured it before I marked in that area. That was the 150% of the breakout of bar one. Okay, and now it's trying to get to here and there. Profit taking will begin around 54.75, but it could reach up here to 60.75.60. So that was that target right there. So you take a little bit of profit there and then leave it runner. Or if you see a bull bar closing, you can add to it. So you're getting a measured move target right there. Well, L does use 150. I mark it. You don't need to take any profit, obviously, but L doesn't use Fibonacci levels like 160, 180. So the alternative is the half R, 150 or 50. All right, so market trying to continue, but it really needs to pull back to the moving average. So we might test on bar 9 low. This is a tight bull channel. So pull back could be 33%, 50% to give the bears a chance to exit. Or we could just simply test moving average and under briefly and then find buyers again. Can we test the moving average? I think difficult to sell, but I think we're going to have to test underneath bar 9, and that's where the moving average is. Bulls are taking some profit here. Could continue to go higher. I think that's where it's trying to go, but it needs to pull back a little bit. It's a bit of a resistance area, breakout test area. Difficult to sell against this many bull bars. So I won't recommend selling anything unless you take profit. If you are stuck still with bar 1, scaling in higher, like 10 points, 20 points now, or 15 points, I didn't measure it from high of bar 1. Yeah, so that's about 18 points from the high of bar 1 they started to sell. But it could go up to 20 points before So it could still test above bar 9 high before selling. But we should come down and test the bar 9 low. If we do come down, moving average is right there. We don't need to. Bulls can keep buying this further up. There's no bear bar. There's no retail bar here for bears to sell underneath. But I do expect bar 9 low to be tested. Bulls buying the close of good looking bull bars, buying above these bull bars, making money. See, it's trying to get to the 20 point from bar 1 high. And that is 53.75. Inside bar, but it is a bull bar. So it is more of a continuation than a reversal. Could go up to 53.75. But it's an inside bar. So now sellers are trailing their sell stop orders from underneath bars. So they are positioned below bar 10, looking to jump in front of the price. They're hoping that they could catch the reversal early on by selling from underneath bar 10 now. So, but it is a bull bar. It's more of a continuation. But if there are any sellers now, they're trying to sell from underneath bar 10. I don't like selling underneath bull bars. There are also buyers above bar 9 and 10. So it's trying to get to the measured move 70, 75, 60. But what about the pullback? Can we pull back? If we do pull back, it's going to be the lower third of bar 9 and low of bar 9. And there will be buyers again. And that's where the moving average is. So moving average is caught up. So we might actually pull back to the moving average and look for buyers, or it's just going to keep going higher. Trying to get to the 20 point, 53.75. About 6.25 to the measured move. The high of yesterday is right there. But problem is bar 1 today. It's too large. Okay, it's not a small body. So we are going to reverse back to it. Even if we cannot close the gap to it, bears will want to get back to it. Okay, it is large enough for bears to try to sell and get some kind of a break even. So we will try to reverse back to that bar. Pullback could be very rapid if we do pull back to the moving average. But it's nothing here so far for bears. Bars started to get smaller though. 9 is smaller, slightly smaller than 10. Now you have 2 small dojis here. Bulls want continuation up. Bears want to pull back to key price, which is underneath. Now sell orders are now underneath bar 11. These sell stop orders are moved underneath bar 11, trailed. Bears want to jump in to a reversal as early as possible with a small risk above 11, but they haven't yet. So bears need to close a really good looking bear bar, activate those orders, It could come down to 47.50. That would be 6 points for bears to start some kind of a trend down, but no bear bar, you cannot really sell or exit out of your long. Still trying to make it upwards to that measured move target 75.60. We're about to test a 20 point from above bar one. I think that was 53.75. Yep. So we just tested 53.75, 20 solid points. It doesn't need to stop here. High of yesterday is the next magnet after the measured move. But what about the machines? Machines could be selling here because it's 20 points higher, but difficult to sell. Retail traders need a bear bar. If we pull back, we could pull back to, I don't even want to talk about pullback at this point. It's still going up due to the target above. But if we do pull back, we could pull back to, again, bar 9, lower third of bar 9 or low of bar 9. Buyers would be there waiting. Bull flag here, bar 9, 10, 11, and 12. Spike. Part of spike is 9. Part of bar 10 low is the pullback, spike pullback. So we might need to pull back to bar 10 lows actually, which is about the lower third of bar 9 anyway. So we might actually pull back there. Finally. If you're trading oil, inventories coming up about 40 seconds. Again, sell orders are being trailed up underneath these dojis. Bears looking to jump in as early as possible. Okay, there you go. So it's coming down, like I said, to the moving average, 44. It should test the moving average. We tested the lower third of bar 9, which I said we would. I like to see its low tested now, and that's where moving average is. So I like to see moving average tested. Bulls trying to keep the gap to moving average open so they could keep buying and get to the high of yesterday or the measured move 75.60. But we are so close to the moving average. I like to see moving average and underneath moving average tested. So I kept saying bar 9 low needs to be tested, and I was not joking about that. Okay. What is my broker doing? Come on. Jeez. Okay. Hang on, everyone. Really? This one is 82. Oh my gosh. Hold on. Some of my broker decided 6. It's not the broker really, it's the order. I couldn't get good fill there, but I didn't close the. All right, now it's all good. Let me check. Good, 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 good. Okay. All right, so we are testing the bar 9 low. There might be some buyers here. Just be careful there. How do we sell towards the bar 1 high? I said it's pretty prominent bar. It's not like a small bear bar that you can kind of overlook. If we start to close bear bars below moving average, we could continue to come down. Swing long target, both of them actually, one inside the range and an above reached, but I think we're going to go higher here. I would look for buyers underneath bar 9, only if the bear bars start to close below bar 9 and the moving average, especially moving average. We're going to then come back and test the bar 1 high. Might even actually overlap with bar 1. So there, bears stuck underneath bar 1 would get a break even. Okay, so what this is doing is causing a trading range behavior, even though we're bullish. Okay, bulls obviously want to keep buying into the 75, 60 and high of yesterday, but there is an unfinished business here that the bears are still stuck and they need to do some damage. So they are trying to bring market close as possible down to the bar 1 or open of the day. And that puts us into a trading range environment. It's expanding our trading range. But this is bullish enough for bulls to start to show up again. It's just not enough for bears to. Here's the thing. Bears already sold 5 points above, 10 points above, 20 points above. So they kind of scaled in already 3 times. They don't need, okay? They scaled in, like those bears stuck here, scaled in 3 times. So they don't need market to come down to here. They don't need market to, what was that, 53.75 was the 20 point. They don't need market to come down to the 50% to get a break even. They can break even because they entered 3 times already, 5, 10, 20 points, right? 21% to 33% is exactly where they get a break even and fix their positions, because you are kind of tripling whatever you were holding here. That'll give you a much better dollar cost average. But you cannot do dollar cost average kind of trading unless you know what you're doing. So take the course, and in the course, L explains where to scale in, right? How machines would count. So that's how I would count: 5, 10, 20 points, but that's it. And if I see nobody's selling at the 5 or 10 points, I will wait for 20 points, but I will double down on what I have here holding just to exit at that green line, 21%. Okay. But again, these are very difficult. You have to have deep pockets, a large account. I would never recommend to do it. You see these 3 bars, that's momentum building. Okay, learn to read these bars, because then if you're sold underneath one, you can exit as early as there. Buy, okay, go for a measured move. Go for a measured move of those 3 bars. Okay, you already made your money and then some. Whatever you lost here, you made, and then a lot more than what you lost. So that not only offset your losses, but you also walk away with really large P&L, green P&L. Okay, so here's the 2-hour target that the market is trying to go to. Okay, and that's right there. Or measured move of bar 1, and that's also exactly where the 2-hour bull target is. So it's always better to take the loss while it is small and then jump in, and you will fix it. You will be forgiven. I'm going to take a look at, guys, today is half day. No one's coming after noon. So I'll probably extend the Q&A session. So I will look at your comments and questions. But right now I'm training, so it is a little difficult for me to do so many things at the same time. First retail bear bar 13. Sell orders parked underneath that bar, but then bulls close above bar 13. So bears trying to get the second sell opportunity here and make more damage and bring price back down to the open of the day or the high of bar 1. Bulls want to keep the gap open and continue up. They have targets above and the magnets above. But again, these bears are desperate. They have not gotten anything. All they gotten was, again, I'll measure it. All they gotten was the 21%. they need at least 33%. Okay. This is like if you really have deep pockets and you can take like 3 times, 4 times what you lost here and you really want to exit, that's that target. But the early bird exit is actually the 33%. So I always aim for 33% if I scale in multiple times. Okay, not necessarily 50%, but it could actually pull all the way back down there if another bear bar this time takes out the bar 13 low and closes, especially below bar 14. So then you would get the sellers definitely reaching the 33%. I'm not selling anything. Just so you guys know, I pretty much did my trading buying into those targets, and there's more up here. So I'm not going to do that. Bears could try for the second sell here. But I'm looking for follow-through buying. You know what's going on here? If you just take a look at here, let me get rid of this. If you just take a look at here, what do you see? Why is this bar trying to come down? And where? Where is it trying to come down? Just looking at bar 9 and 10. Bar 10 is an inside bar, okay? Bar 10 is an inside bar. And bulls actually closed, actually, yeah, they closed above, but before they closing above bar 10, they closed a bear bar below. So see, although I'm not sure. Yep, they did. Look at bar 13. That body actually closed 1 tick below inside bar. So technically, this is where they're supposed to go. This is their target, 23 ticks below bar 10. So, but now bulls made a little bit of money there, but now those bulls will buy because they also closed after that, but it's too late. So the bears sell, bring it back down to the 13 close or 13 low. Now, I would not have sold 13 to scale in like that because my sell order would be underneath 13. Okay, so those sell orders are now activated. Those bears want the 1 hour target at the minimum. But what about the bulls? Bulls also have a bull bar closed above the inside bar 10. So they were making money. They bought 1 tick above 14. So they're going to buy and they're going to try to fix it. So we're going to go right back up again. So you're wondering what's happening here. That is what's happening. Okay, so we reached the 1 hour. Remember what I said, this can come all the way down to the bar 1 high. But now bulls need to buy because they are now stuck buying right there. So they need to buy here. Their break even is 46.77. And that's just the minimum. That's right there. 46.75 really. And as it goes higher, those bulls actually make money. See how that worked out? If you were a bull, did you guys follow? You want me to go through that again? Do you understand? I taught you guys this technique last week. You should have made notes and go back to it or save the video. But if you haven't understood, do let me know. Not on Discord, but on GoToMeeting webinar. So I could go through it again. It's basically mother bar play. Okay, so it's outside bar, inside bar. Okay, you're not going to get that in the course. You're going to get only the meat, potatoes, and meats and potatoes of the whole thing, how to trade, but you're not going to get these things that I'm talking about. Those are my added technique, but you can really utilize it. It helps you see it. So basically, you get an outside bar 9, and the 10 is inside bar. Okay, so how would you buy with the stop underneath 10? You need a bull bar closing above, not the close of inside bar, but above. So you cannot buy bar 11. You cannot buy bar 12. None of those bodies are closed above bar 10, right? Nope. So then bears come in and they actually close a bear body below bar 10. So technically they have the right of way to sell. How do you find your target? Half R and 1R. You measure the inside bar. Look, they reach the half R, okay, but then close there. So you put your sell stop order 1 tick underneath 13. However, bears did sell the close of that bar. Maybe they sold underneath the inside bar. I don't know. Or they trailed the stop order and they sold. They were making money, but actually selling should be from 1 tick underneath 13, and that would be your first target. So that those smart bears trying to utilize the stop orders, they did not get in, but the market order bear selling the close of 13 got stuck. Bar goes and closes right up there. So when the bears have the right of way, they're going to sell above, okay, this is a trading range, above the bull bar or the close of the bull bar, and they're going to try to bring it down at least to where they sold, probably the 13 close. Instead, it actually went further than that, came down, activated the sell orders underneath 13, and every bear actually made money because it was their right to make that money. So you wait for, now bulls close that bar. So now bulls got a right away too. So bulls are now clearly buying above 14, hence 15 went above, are stuck. So those bulls are going to wait for bears to make money at 1R. And this is where I put a buy order again. And as it went up, I made money. I'm still holding for long up to 75, 60 and higher. So now bulls are now trying to get to the high of bar 14 because they had a valid trade there. Bar 14 actually closed above the inside bar high, a bull body. Anyone bought there, they bought here, they got a break even with that contract. They're trying to make money with the second one they bought here. And in order to make that money and more, this bar, bull bar, or the next bar needs to now go and test the close and high of bar 14. And chances are that's where we're going. And if bull bars start to close above bar 14, you're going to get more bulls coming in. Understood? So because the target for bulls was half R, which we haven't reached, so the target is still 75.55, and we can even reach up to 1R, 75.58. This happens over and over and over. Instead of panicking, please understand what the machines see, okay? And then you're gonna be like, I get it. Now I see the double bottom bull pattern, bull flag pattern as well, so I should be buyer. You can see where the bears, some will say that's bears trap. No, bears did not get trapped. Bears trap selling too early underneath 13, but those bears sold break even. This is not a trap. This is a break even bar. So you also need to understand what these bars are, their purpose. Okay. Once you see that clearly, there is no stopping you. Okay. You are going to be consistently making money. And what's happening right now? The bulls actually reached bar 14 high. So every bull bought there because they closed the bull bar above the inside bar 10. So they thought they had the right of way to make a half R and a 1R and maybe even 2R. They got trapped there. They buy lower. They wait for bears to make money. They buy lower. They bring the market up. They made money, right? And break even, full break even. So now they're waiting for bull bar to close above bar 14. They can add another contract to their winning trade, hold it all the way to 1R, which is 75.58. And I would urge you to write down what I said or go back and watch it over the weekend and just go to the charts and find those outside inside bars. Same thing right here. Look, would you have bought bar 43, one tick above bar 43 by looking at 41 and 42? Would you have bought bar 43 high? Yes, no. Even though it didn't go. Why wouldn't you put a buy order above bar 43? If you said no, you're right. I would. Why? Because bar 43 did not close above the inside bar high, a bull body. So you do not want to put a buy order above 43 because if the bears close below, heck, bar 45 did close. So right away is for bears. That means they should be selling one tick underneath 45, targeting 1R. and they got it. Look, 1 hour. Now, and then bare body 50 close. So they were holding for 2 hour, maybe 1.5 and 2 hour, right? Then you get bar 51. What do? If you're a bear, you scalp at 1 hour and held another contract down to the 2 hour, and you're disappointed with 51, what are you going to do? You're going to put a sell order right around the breakout point, right there. And when it comes back down with that contract that you're holding, you're going to make money and exit. You see these bull bars? Now you exit and then buy. You're going to target the midpoint of the inside bars range. If you buy, that's where you're going to scalp. Many bears will sell there again because they're probably still holding for 2R. They exit with that. Then you see a bull bar, now you can buy. If there is no outside-inside combo, you can still continue to use it. Now, what do you need? You need a bull bar closing above bar 42. Imagine there is no combo here, so you don't have to. I'm looking to see there's nothing. There's one right here, but say you're still using this. Now you have a bull bar closed, right? This is the bull bar. Now you can buy one tick above bar 64, and this is your 1 hour target, and that's your 2 hour target. And look, bulls reach the 1 hour and 2 hour just utilizing that inside bar. Or there's a combo here, brand new one. That's 53 and 54. Bulls closed above. So now that's 1 hour, that's 2 hour. Oh, no wonder it went up to 2 hour and they came back down. See? Because that was bulls buying. Okay? They even bought the pullback in the middle and then got a 2 hour. And I even got I don't have the 3 hour, but they bought the pullback and they got the 3 hour, and the 4 hour, and a 5 hour. Right? So now there's a brand new one. Or here, this one. That's an inside bar, bulls close. So that's 1 hour, that's 2 hour. Pullback, let's get a 3 hour and a 4 hour. Another one, 65, 66. Bull bar closing, buy one tick above. That's your target and that's your target. Isn't this great? I've been teaching this since 2018. Okay, so now bulls want to get to that. Oh, come on. This broker really annoying me. Okay, that'll do. Tight trading range. So you got sellers here, buyers underneath, sellers above. Still going sideways. Bulls want to go higher. Bears still trying to sell. Bulls got to break even with bar 17. They want more than that, but they couldn't close a bull bar above 14. So that's the problem. If you're wondering why bar 18 had to pull back like this, that's because bar 17 never closed above the high of 14 where bulls enter to go long. Okay, so now they need that bull close to buy into this target or even that target 2R. So 57.75, 57.50 is the target for bulls, but they really need to close a bull bar. Then all the bears exit and we get there very quickly. Bulls now closed bar, and it's a really good looking buy scene. It's not the best, but it'll do. So they're still trying to push higher. But it's not the best signal bar. It's doable. And that's it. So we got that target. Excellent work. Now, can we go higher to the 2R? Measured move target is 75.60. So there's that, but they're taking a little bit of profit there now. You can see how it came down. Can you guys see it, right? It's exactly how I explained earlier with explanations. So now you're seeing a demonstration. Yeah, I mean, if you guys want private coaching, message me. I think I'm going to start doing that now. There will be also group coaching with BTC. That's going to be set up. Please go to the brookstradingcourse.com and message. There's a messaging function, email function. Subscribe for the emails because Richard is going to send out those emails. If you haven't subscribed, you won't get them. Or message Richard and ask about the group private coaching with Rose. Okay. But he needs to get those emails so he can put your name in the list. But if you want one-on-one, then privately contact me. Those I'll offer through my Discord. I'll do like a 1 hour, maybe 2 hour thing. We can discuss privately. So, and then eventually in the future, I'm going to do like hour-long over the weekend group sessions on Discord. So if you guys, I haven't figured out how to do the payment option. I'm a little lazy with that. So I'm all about free stuff. So I ended up doing everything free. Like, I can't figure out how to do this stuff. I guess this is going to be free too. So it might be a free. So join the Discord and be part of it because so far I have not charged anyone anything. It's always been free. And then I say, hey, it's going to be a 1 hour. It turns out to be a 3 hour deal. So, but definitely contact Richard via the Brooks trading room. I'm sorry, Brooks price action. What am I saying? brookstradingcourse.com email box. That's how you would get on the list. Okay. And we're about to test the 2R target. We got the measured move here. Magnet above. So we're probably going to get there. We start to close above the magnet. We become a lot more bullish. And every pullback to moving average would be bought. So you can see how that worked out nicely. I entered right there at the 1R bear target. And you can imagine I held this up, so you can imagine my P&L right now. It's just looking very good at the moment. Oh, thank you, Jack. Appreciate that. And that's the 2R right there. Gonna prove my point. Problem here is that we have a bad buy signal bar, but we already came down and tested and kept the gap open. So now bulls buy it. Might get another leg up. Remember that yesterday's lessons? If you paid any attention, when we have bad signal bars, in order to sell, bears needed to close a bear bar like that. Okay, then it would have sold a little bit, maybe gotten a 2 little legs before bulls showed up. But you see how bars 18 came down, tested that button, and then closed bullish. So there's a gap left. So that means you can buy one tick above 18 and go long. You can even measure that and go for a 1R if you wanted to. And that is a high probability trade that you would just cash in pretty fast. It gave you 1.5R. Or you could say, that's not how I'm going to measure. I'm going to measure as bulls actually both there. Maybe you can measure. I don't measure like this because then you're waiting for kind of like the 2R there. I measured that bar because they're buying above it with the stop underneath. This would be, I would still hold something to run. I would take profit at the 1R because I see bar 19 close above it, right? I'm going to hold for 2R. So I also scalped the 1.5R and maybe even holding for 2R. And I would wait the second leg going up. And with that second leg, I would cash in at the 2R. So that's another lesson for you guys. That's just a repeat of what I showed you yesterday over and over. If you want a refresher, go back to that, how to utilize the bad signal bars and determine which direction the market is going to go after testing that bar. It's about how you interpret, okay, the course. Like you can take 10 different courses and you could say, hey, I successfully finished the course, therefore I should be a good trader. No, it won't work that way because I've done it. Well, really not couldn't do it because, you take a course and there's watching the course, learning, and then there's the live trading, which is like a total different. There's emotions involved and, you know, um, all the other things involved that even if you see something right, you end up taking the opposite side of that trade and then you lose and then you wonder, wait, I already saw that. That was, I knew exactly where it was going to go, but why did I take the opposite? That's your emotions because right there, your mind is telling you may have taken the course, but you don't have enough experience to take the trade in the live setting. Therefore, you need to put in like 100 trades in a sim environment, okay? Taking the exact same setup that you once learned and get that experience underneath your belt, okay? To build the skills so you can close your eyes and ears and nose and take the trade and still make money. So there's that part, okay? So taking a course, everybody interprets differently. I've been told before, wow, the way you think and see things is very different than how I actually heard in the course. Everybody's mind are, are wired differently. So, I mean, and think about it. I'm actually, English is my second language, despite how long I've been living in the United States and speaking this language. My brain is wired so differently. I take something that is a different language, foreign language, I translate it to another language. So I'm trying to make sense of things. So when I explain it to people, some people are, wow, I know this is in the course, but it sounds like a whole different thing that I've never heard before, and then they see it. They start to they go back to the course and they watch it and like, oh, I totally get it now. I see it. Now I see the mechanics of it. And now I'm able to trade it. So you talk to anybody on my Discord server, they're going to tell you how quickly they can apply to their trading and they're winning, regularly every day. So you can be that person too. You don't need my help. You can be that person. So what does that mean? Long story short, learn from the course, BTC course, but take it and make it your own. Okay. And then take 100 trades, mark it down, create an Excel spreadsheet, take the same trade in a sim account in a live environment like today, but take those trades in a sim account and then see if you actually, that trade that you took was positive P&L, okay? And just put it in the Excel and put it in the Excel. And in 199, 100 trade, take a look at your win rate and see you can actually in live funded account, you can actually trade that setup for another 100 days. You know what I mean? And that's how you become consistent. See, it's trying to get to the 2R. 2R happens to be the high of yesterday. How are we different though? Somebody's saying Tim Ferriweather, Tim Stout, Brad, and Rose all teach the principles in the BTC course, but have very different styles. How? See, I disagree with this comment on Discord. How are we different? I trade exactly like those guys trade. So this was a measured move. Brad will call it and trade into that measured move. Did we get that measured move? Yes. So how are we any different? Brad will say, you see these bull bars, exit out of your trade and look for 2 legs up. So haven't I said that? Yes. So haven't I called this a double bottom bull flag? So that's high 1, high 2. You buy and you buy the bull bars after a bad buy signal bar retested, and there's a gap, and Al would explain that very well, just like the way that I explain. Where do you think I learned it? So how is it any different? Or you could say, hey, there's Tim Ferriweather. You would he would say to you, or Tim Stout, here's the trading range. Buy it and go for a measured move. And that's your measured move right there. How is this any different? Now, I would say if you want to be conservative, then you exclude those wicks and you go for a 1R and 2R. Have we reached that 2R? Yes. How is this any different if I'm pointing out the same trading range? Or high 1, high 2. That's a bad high 2, right? You're buying above a bear bar. Not a good idea. But why don't you buy above bar 18? Right? There you go. That's how you go long. So how is that any different? So our styles are not different at all. So I would definitely disagree. So I'm going to give this a thumbs down to express my disagreement. Health, actually, first part, you are right, but still, I'm going to give this a disagreement. Don't hate me for it. Now I can't find a thumbs down. All right, you know what? It's a bad sign. I can't find it. So maybe I shouldn't give you thumbs down. I seriously can't find the emoji, so I'm just going to give up. All right. Universe didn't want me to give you a thumbs down. Let's listen to the universe. No, but there's another one. Oh my gosh, you guys need to shut up. Here is Engine Sun. Rose is better than the rest. I disagree. Now, this I'm going to give it thumbs down for sure. Where's that thumbs down? I am not better than any of my teammates. I disagree with that. There it is. I am not any better than them. I think we are a great team. We all complement each other because we all talk the same. Okay. I'm in awe with Brad and Tim Stout and Tim Fairweather. Their skill sets, actually. I've learned a lot from them. I attend every single one of their sessions. I never skip. Never. I'm always there listening. Okay. I don't believe in somebody's better than the other one. Okay. Concept. I believe in everybody is better than me concept because that opens the door and gives me room to learn from everyone and crush my own ego. Okay. So, because once I crush my ego, I know I'm going to be profitable right off the bat. You know, people with large accounts, like millions of dollars, aka Tom Hugard, he can have an ego and he earned it, right? So we could say, hey, the guy has an ego and he earned it. He has the right to have ego. So who am I to judge that? Anyway, but I don't think he has an ego. I mean, I've experienced him. He can be very annoying, Tom Hugard. Ugh. But I don't think he has any ego. He's actually a very down to earth person. He's moody. Sometimes I feel like, what's wrong with you? You need to take some pills. But all in all, he's actually, I don't think he has an ego. He loves to help. He's a very altruistic person. He's like those, what am I actually told him that. He's, those humpback whales? He's like one of those. They have a story, humpback whales. They're known as a species, even species out of their, um, what do they call it? Like non-species, like they show out of nowhere and they help every species under and above the water. So he's like those people, those animals. I did tell him that and he never commented. So it's probably like, oh, this is a head scratcher. What is she saying? Yeah, Tom the humpback whale. I think you guys should go back and tell him, you know what, Tom? You're like a humpback whale. Maybe he gets it like 10 times from people. For fuck's sake. Oh my God. All right. It's a half day, so we're allowed to have fun here. No, send him on Telegram, private message. He won't check here unless he's lurking. Send him a humpback whale photo or a GIF or something, but say nothing. They're traveling back anyway, so they got nothing else to do just to look at their messages. Like hours to kill. All right, so we're now closing above high of yesterday. Can we actually get a look? Maybe I can see this right here. Get a much larger measured move. Yeah, so that's one target. That's just conservative. Okay. And the other one, you can literally take this entire leg and project it up. So the market will keep going up and up and up and up. And this is conservative, this is non-conservative of the bull leg. All right. Market Just trying to reach to that one. I did not say that, Jamie. Jamie, you are a troublemaker. You're terrible. Jerk. All right. Bulls are pushing higher. This is actually pretty good price action here. So I'm still long. I added even more with bar 21. So I'm looking for, if it closes like that, I'm going to add another one, another contract. 40 points is 80.25, measured from the low of this bar. But let me check. Yeah. Oh, no. Yep. So 40 points. Trying to reach there. So we might get a brief rejection from there and maybe like a pullback, but we could probably 75.87 is the target, but I'm holding. I am going to take some profit here, give myself something. And then Jay comes in here. He would have missed that. Yeah, okay, so we're getting a quick rejection at 75.75. That's because the manipulation area for S&P machines, but we should continue into that 40 point. Measured, it's probably going to go higher because I'm measuring from a bear bar's low. It should be actually measured from here. So it will get us to that measured, conservative measured move target. But I'm just going to use the pivot level just to make things easy, because some machines will look for easy measurement. And another swing bull target met. Oh no. Where did my stuff deleted that accidentally? Yeah, so Asia range measured move targets up there, but we're right at the next swing target. We could even go up to here, 75.89. Because I want this target 81.25. This one didn't work for bears. We never got a bear breakout. So this one worked. So get rid of that, because bears were already selling made money with the trend reversal. We don't need this anymore. Right, so you would go along with that 15-minute bar, right? And right here, or the second one, and that would be Tom Hugard trade, right? I think it's the second bar, but you don't have to. I would have bought first 15-minute bar, and then wait, is this the first bar? Yeah, sorry, that's the second bar. So you would go above this bull bar. You can even buy that one if you want, and then you have a bull flag, expanding triangle bull flag right there, and then you would buy right there as well, and then you would also buy that. It's just nothing but bullish, and then you would utilize these target levels to take some profit and leave a runner. Doesn't need to stop there. Keep going higher. It's the leg one, leg two. Conservative measured move target is up there. Beautiful price action today. Really want the 40-point solid there. Made 39, I believe. Nope, not yet. So this is going to go up. I really want the 40 solid. Doesn't need to stop there. It's probably going to try to get to 75.87. But gapped up so much from the moving average, some profit taking happening here, but I would not trust the bears here. It's a tight bull channel with 4 bull bars, 33 to 50% pullback of this. Buyers will come in once again. Even if we pull back to the high of yesterday, buyers are going to be there. Okay. So it's a bit of a profit taking, but we haven't made the 40-point solid, and that's very conservative way of measuring, the easiest way of measuring. And the 40-point, this was bearish until, all down to here with bar 16 low. This was a bear bar and closed bear, so you shouldn't be actually measuring from the advanced way of measuring would be either the low of 18. I'll take the low of 18, and that happens to be exactly where the conservative measured move target 75.87 is. So we're probably going to keep going there, but I'll measure for the easiest way. So we should get that 40-point and then add another 5 to 10 point up. Well, it's a bit of a pullback there, but buyers will come in again. Yeah, I'm going to buy again because now it's pulling back so much so that is an outside down bar. Automatically bears will sell under or the close of the bar, but bulls are now stuck about 23 and 24. They want to test the midpoint of this bar to break even. So we might actually go and test the midpoint of bar 25. Midpoint is around, I think 75, 74, like 74, 74 and a quarter maybe, I don't know. Sellers, limit sellers are waiting there. Market, sell the market. That was the close of the bar. Bears sold and sold 1 tick under. It needed to go up here, 74.50. All right, outside down bar. Trying to sell, but bulls are going to buy. They need to reverse it back up. Okay, so we came down just about, I don't know, is it 50%? Bull leg, yep. So that's where the bulls buy. And they were expecting midpoint of the bear bar tested 74.25, 74.50. And then they would exit there. So it needs to go up to give the bulls a chance to break even. You could also just test the close of 23 or high of 23 and fail. But I kind of want to see the midpoint of bar 25 tested. And that is either 74 and a quarter or 74.50. And that is the high. I think it's the high of 23. No, that's trying to still like, oh, we're gonna bring it up to the midpoint of this bar. I did buy at the 50% and already have a break even with the contracts that I added here and there, but I like to see it go up again. A little bit more for that last contract I added above 23. So it needs to go and test a 74 and a quarter or 74.50 area. Bears might want another leg for bar 25 though. So we go up here. Sometimes we go all the way up and then they sell and then they exit out. So I moved my stop. I don't like this bear bar, but we got a bunch of targets up there. Remember I said if we pull back to the high of yesterday, there will be buyers there. Okay. So that was also the 50% pullback of this leg. So I did buy there. I kind of want bulls to bring it right back up again, but I've already had a break even. So I just left one contract only. I'm still long, but I have a one contract. Don't like bar 25. It will want to get another leg, and I'm just not gonna mess with it. So one contract is one contract. If they kick me out, they kick me out. I'll get back in again with bull bars. So a lot of profit taken there. Target is still the midpoint of bar 25. The bull's trying to get to, or the high of 23. Bears want a second leg down. 74.50 is where we need to test. There might be some sellers there though, be careful, because that bar needs a second leg down. Bears want a bear flag, so they start to sell from above bull bars, like bar 27. But this is a bullish trend, pretty strong too, so gotta be careful here if you're trying to sell anything. Member here wrote something actually pretty cool. I really like this. He's comparing to what we were talking and joking about to golfing. So I'm not a golfer. When I get angry, I go to the driving range and start hitting. And I like to do that in the middle of the night. I do like to hear those like crashing noise that, when somebody hits a golf ball, makes that really scary noise. I love that. So kind of go there to get my aggravation out of something that bugged me. But I'm not a golfer. I don't understand the rules, but he's saying even though sports might not be strong suit, this is actually a great example. Every golfer has a completely unique swing, yet all the pros share the fundamental ability to hit the ball straight. The fascinating part is that how they think about and explain their technique varies wildly, and just as importantly, how that advice is interpreted depends entirely on the person listening. Keep on keeping on. Um, you do really great work. Thank you so much for this. I do agree with you and what you said. Not for the golfing part, but I totally get what you're saying. Is bar 20 a mother bar? Is bar 20? Yes, it is. And it's the last one, in fact. And we had a breakout. So you buy, and you could take either the inside bar or the mother bar measured move. You can take the inside bar, so that's 1R, that's 2R. Inside bar will give you a lot more accuracy in terms of finding 1R and 2R targets. So you buy one tick above as late as entry with bar 24. If you enter that late with confirmation, that would be your target. So you get a little bit more than 1R. But to me, this is a look, high 1, high 2, bad high 2. So that's it right there. You buy or breakout, pull back high 1. And this is the kind of high 1 I would buy. It's an implied bull flag. I would buy it and I would just go for 1R, 2R of that bull bar. Okay? Or stop underneath, but then we missed it. You see, that's because I don't like to measure a bear bar. I'll measure a bull bar. It's the bar that I'm buying. Someone said when you said you added at bar 21 high, were you not concerned about yesterday's high and other potential bull targets nearby? No, because I had measured targets, so I was going into those targets. It's just look, these are important levels, obviously, but look how bullish the market is. So it's gonna cut through the high of yesterday, okay? And a leg like this needs to get at least one or two legs up. So I will not let that line scare me. So, and we're gonna break out. So breakout continued. Now pull back and see if the bulls can come in again. That's the second leg right there. We did not test 74 quarter or 74.50. We missed it. So sellers really showed up at the 33% pullback of bar 25. It doesn't matter. I mean, if you did buy here, you already got a break even with bar 27 anyway. If you were, and that's another thing. Look, if you're looking for bulls to keep going higher, right, to these levels, you needed bulls to actually close above at the minimum 23 close and then 23 high. That was the last stop order buy. And they failed. They're failing because bears want to sell. So they start to sell from above bull bar, as I said. That's bar 27. And they have an outside bar here. They want to keep selling this, but bulls need to push one more time. So I would not be a bear here. Okay. I'm not interested in selling. Not yet anyway. I don't see a bear pressure here because there is a trend line here. The channel line. Okay. Yes, we broke the channel, but do you really want to sell? That's the question. I don't want to sell. So now it's trying to get to the midpoint of bar 25. I don't care for this 40 points anymore. Why is that? Because bears moved the market enough to pretty much reset that. So you count from the low of 26, and the target for bulls is actually 76.50, but they haven't closed above 6-point mark 73.50. I need a bull bar closing above is 73.50 to get the 76.50. Or 77.50 would be 10 points. So many bars tried, nothing closing above 6-point. Bears have a counter trend here. They're trying to start. Maybe the bear pressure is building up. I don't know yet. There were sellers underneath bar 28, and they already sold because 29 went one tick below, but I didn't sell anything. I want continuation up. It's difficult for bears as bulls trying to swing back up again to the high of bar 23. We have a conservative measured move target up there. We haven't even tagged the 1-hour Asia bullish breakout at 81.25. So we left that behind. Mark 81. Hourly, first hour is strong. So second hour gets continuation. We reached that measured move. I'm gonna get rid of this now. Last week's high, range high, seems like where market is trying to go, but a bit of a resistance here. So there's a little bit of room to upside there for bulls. They want to test the last hour's high, and we're probably going to test it. I do have target there 81 Asia 1R, but then I have the conservative measured move target right there. And then the actual measured move of this bull leg projected up. 74.50 is what the bull's still trying to test. High 2 from above 20 bar 30. Bull's trying to come in. Bulls want 74.50 and higher. They want the 23 high. Test it. But they have to keep closing good looking bull bars there. Up, so midpoint. Ooh, maybe one more tick. Yeah, so it's reached. Could there be any sellers here? I think bulls are trying to go higher here. Okay, so there's a good question here. I'm going to try to take a crack at this. I did scalp it a little bit higher. So I needed price to get back above bar 23, which I got it. Okay, so I scalped it, so my risk is pretty much very, very minuscule, so I can answer this question. So someone's here, say you enter with a full position, full portion. I can't see that, so let me take this window to another monitor. Okay, so it says, say you enter with a full, I think it says portion, but I think either it's position you meant to say, or 4 contracts. Okay, you enter a trade with 4 contracts and you have 10 points measured move, you scalp 1 or 2 contracts. Okay, so your trade, all right, at the half R. All right, so basically you allow market to go 5 points into that 10-point target, and then you take half of your contract sizes there. Okay, you banked something there. Okay, gets to the 1 hour but stalls there. So you cut the remaining of the contracts. It's in the next trade, same measured move, but it goes against you and hits your stop with a full position of 4 contracts. This makes a bad trader's equation. How do you scale out of your losing trade before it hits your stop so you don't take a full position loss? I've been struggling with this, taking larger losses than wins. Depending on how you're entering the trade, or look, I'm not going to expect 2R trades if I don't see market hasn't made 2 legs up minimum, and then maybe even the 3rd leg. Then I will sell, but I will start to sell small, right, with good looking sell signal bars, maybe like that. So I would sell into here and I would take profit there. But really, you see this in the middle and here, these are my actual targets. If market comes in here and bounces, that's because that's profit taken by the initial profit taken by the bears. But say that's your 1R, that's your 2R, right? Or that's your 1R, 2R, 3R, whatever. So once I see a bear bar close, okay, I can actually add to the trade with a pullback, and that's when I take some more off, okay? That's basically your 2R, maybe. But really, this is what you should be holding the trade for. But what if it just reverses back up? If it reverses back up, you didn't put your stop there. Your stop is still at somewhere here, okay? Maybe you lowered it down a little bit, but this pullback would not scare me because I would scaling in again with another sell signal bar, okay? And then I would expect price to come back down here. This is what everybody exits. That's because, or either they exit voluntarily or involuntarily because they move their stop to their entry, and then their entry gets hit, and then price reverses back down and you're kicked out, you give back everything you made. That's how you lose. So you got to keep the stop up there. However, if market has only made 2 legs, maybe, and then you already sold a sell signal bar, maybe a bad sell signal bar, right? And market actually comes down halfway and then reverses back up and keeps the gap open, well, bulls were not done. That's how they get you out. Okay, you take a little bit of profit there and then you let it go back up because you basically didn't count the 3rd leg, and bulls were not done yet. They needed to do the wedged up. So then you look to enter again. There you're probably going to get 2R or maybe 2.5 legs or 3 legs or something like that. So how you count is important. Like here, this is a great example here. Like say this is a leg 1 and a leg 2. You think that this is already sold, so you're selling, right? It comes down here, but you're holding for either that high or here, and that's where your 2R is maybe, but you already got the 2R there, and that's a bad signal. That bad signal should tick you off anyway, that you may not get that follow through. And then they go and run your stop. If you put a stop above a bad signal bar, chances are it's already in the 3rd leg up. And that's exactly how I explained earlier. And that's how they get you out. But if you count it, if you waited, now you have a good signal bar. That should give you more than 2R. Okay, that should get you down to here. You make money, right? And then look, it continued to sell the next day. Where were they going? Going to that. That's the 2nd leg starting point. 1st leg, 2nd leg, 3rd leg. Once we get below the 3rd leg starting point and we're bearish, you should hold that swing all the way down, either to the bull gap or the starting point of the 2nd leg. And you have a good, like, you can put your stop there and leave it. And then once we take out the 3rd leg's low, then you can utilize that as a lower high. Then we're now taking out that. Now you can even lower it down more, but I would just leave it above bar 80 and then keep selling into that, and then you're done. So you have to kind of practice it. If I want to really get 2R minimum, I want to make sure I'm selling, okay, legit wedge reversals. Okay, that's where I'm going to get the best moves, and my trader's equation is going to be better. And trader's equation is going to be better, like goes up, sometimes it comes in, goes back up again, right? And it comes in, that's your 2nd sell. 2nd sell, okay, or low 2 from the highs is going to give you a much better trader's equation. Might come down here, like maybe 1R, 2R, so 1, 2, 3R you could get. Anyway, so that's how I would look at things. Oh, believe me, there are times that I'm kicked out if I move the stop too fast. And, you know, like here, we have 2 legs. We don't have a 3rd leg here, but a good sell signal bar, right? So if you sold this, now your stop is probably above. The thing is that I would put my stop further away. Like how do I do that? This is a trading range. I would measure this trading range. My stop would be up here, like 1 time the trading range projected up. I would have a white stop because if market wants to make the 3rd leg up, right? 3rd leg up, it could go to maybe here and then start to come down. Now I can add to my short. But if I'm selling this 2nd leg up, even though you have a good sell signal bar, you know, you're selling the 2nd leg. There could be a 3rd leg. So if you're selling, at least have a white stop, okay? So you're not in the way. They can kick you out and then start to come down. And if it starts to come down, then your white stop will keep you protected. And to find a white stop location, I see a trading range, I'll project it up and I'll park it right above it. 1 time projected up. Hope it was helpful. I get kicked out all the time. I'm here to make money. I don't, here's the thing, we all want to be a 2R trader. Yes. But 2R, you're a true R trader, I mean, that's great, right? So here is your, look, there's a pressure, but even bar one is still putting pressure on me. So how do I actually make sure I get a 2R? I need to see bulls invalidating bears. Then I could say, you know what? I have a Rose's caveman or multi-bar reversal here, right? Look, bulls actually take out here, right? So they have taken out a strong bear bar. That's your signal bar one, and that's your trigger bar for this setup. All right. So you buy one tick above bar 6. That's your 1R. Bulls are trying to get to the 2R. That's the 2R target. So your stop is down here sitting like a little further down. Now, look, we took that out. You can put your stop underneath here because you already got the 1R and the bull bars are closing above 1R. Your stop should be parked underneath bar 16. Nothing's going to come and get you. We're going to the 2R. So target is actually 84. Well, there's no 8490, so I measured it really badly, obviously. All right. So the target is, our target is 8550. So the bulls are holding for 2R. Okay. Okay, so we're 15 minutes after 12. Kind of answered everything, I believe. I'm done with my day. Market is trying to make the third leg up here. Can we pull all the way back to maybe like a 50% retracement down? Well, if it does come down here, bulls have to buy because they're holding for 2R. They're going to buy the bounce and break even. This is where I would hold my long into 2R target, which is right here. So there's a cluster of targets here. This is Asia 1R, Asia range, 1R target. 87 is conservative. Bull leg bar 2 to bar 12 high. Okay. And this is actual quite a bit of targets still. So I like to see these two hit. The 2R at 85.50 and 75.87 conservative measured move target for bulls. Can we get a double top here? I would not exit out of the longs until I start to see consecutive bear bars closing below high of yesterday. Okay, so I would not sell anything until I see some bear pressure and we're moving underneath high of yesterday. So yeah. Even if we do move, bulls could buy again. Okay, bears trying to get a double top. You should not be exiting out of your long unless you see surprisingly big bear bars closing below things like high of yesterday, moving average. Otherwise, you sell, they could trap you. Bulls got targets up there still. Okay, so I am done with my session, everyone. Tomorrow morning, I will be in again, and then either 9 o'clock or 9:15. And then Brad Wolf will come in tomorrow afternoon, Thursday. Friday, we don't know yet because people are going back, depending on their traveling. You know, if they can actually, if they have fatigue, they cannot obviously stream, but Ken will post the information for Friday. And then we would go back to the normal scheduling. We would have a schedule posted over the weekend probably. All right, I'll see you guys tomorrow. You all have a great day. Stay safe. I'm still bullish. I still want market to keep going higher. I'm not going to exit unless bears start to surprise me. Then I'll think about it. Okay, with good, maybe 2 consecutive bear bars. You know, showing me some always in short. This is always in long, and not interested in exiting anything yet. All right. Have a great day. See you all tomorrow. Oh, Friday market is off? No, that's the 3rd. So we should not be off. I don't know. It's just um, before 4th of July. So, all right. Bye, everyone. We are closed Friday? See, I don't know. People are telling me. I have no idea. Ken will tell us. Maybe Friday is off. Who knows? I don't know. No idea. Is observation. What are we observing? Oh my God. I have no clue. All I know is I'm going to be flipping burgers and hot dogs and, okay, watching some fireworks. Oh yeah. Probably make some margaritas. Oh yeah, totally. So yeah, I mean, that's what I'm going to be observing most of the time. How much margarita left in the blender starting Friday if we are off. Got to get ready for the holidays. So I'll see you guys tomorrow morning. Bye, everyone.